More and more retail traders are trading the agricultural futures these days, especially grains. Our guest today is Dan Gramza to talk about that. So Dan, why are we seeing more interest from retail traders in wheat, corn, whereas 20 years ago especially it was purely the reign of professionals?
A couple reasons, I think, Tim. And first, I think you're right on target. We are seeing them there. We're seeing them there for, one, technology allows it. Easy access to the market. I mean, what's fantastic about trading today, it's so easy. I push a button, bada bing, I'm in the market, right? Well, what's bad about today is that I can push a button and it's so easy to get it right. It's the other side too. But the fact is that technology has made markets globally accessible. The other thing I think it's driving the grains, though, is the alternative investment idea. People look at interest rates in the United States and they say, where do I put my money? So they may take 10 or 15%. Maybe look at those futures markets, for example, because that's where you and I could invest in those grains. If I look at those, my advantages are we see volatility, and that's what people are looking at, because as a trader, volatility means potential for profit, and so I think that's attracting that kind of money that we haven't seen traditionally in the past.
All right, let's talk about one of those markets specifically, corn. On a trip to Ohio recently, I saw all the cornfields empty because it had been too wet there. They haven't been able to plant. Sure enough, the next week after, the Agriculture Department comes out and says supplies are low, and the price had shot up. But it's come off of those a little bit. What are your thoughts on corn here for the rest of the year?
Oh, that's a great observation. Tim, I got to tell you, let's take your idea and take it a little bit further. We've had some floods over the last few months in the United States. If you look at the area, the farm area that has been flooded, intentionally and unintentionally, it's the size of Massachusetts. Now, here's the thing that I think that you and I need to be careful about. First, we're in a time of year, not only beginning now, but going forward to the next few months, we're going to see a market that's moving on anticipation. We don't know what the grain crop is. We don't know what corn is until we harvest the doggone stuff and we say, hey, this is how much we have. This is how much we have from last year. This is what globally we need. Do we meet that demand? Right? That's the bottom line. Well, we don't know that answer, but what we see is the market anticipating some kind of event. So we did see that rally over the last few weeks. We did see a market getting stronger, but more recently we saw it backing off because they said, something, maybe our estimates for corn weren't that far off. And here's the thing that I think you and I need to be careful about, because in 1993, we had a similar situation when Mississippi overflowed its riverbanks. I remember driving down to the Cahokia Indian Mounds with my wife, and we saw, my gosh, as far as you could see, land flooded with all this water. And I thought, oh my gosh. I was kind of along some beans, and I thought, boy, this is the year of the bean. The beans in the teens, is what I was thinking. And sure enough, they did rally. But what I kept doing for the rest of the year is I kept trying to buy the break. In other words, as the market was coming down, I'm trying to get on that long side because I believe it looks so bad. Bottom line is this, the market's right. Instead of selling the market, taking advantage of that movement, I was trading my belief, not the price action that we're seeing there. What we did find that year that I thought was absolutely terrible, we lost about 10% of our crop. So it wasn't that bad. Other parts of the country had the ideal growing conditions, and we had a pretty good year. So I think that's what you and I need to be sensitive to. We need to be sensitive to what we see from a fundamental point of view and what the reality is going to be. And so we got to be prepared for some volatility.
And also be willing to change your mind if your belief isn't what you're seeing in the markets, and be able to trade the opposite of that.
Tim, that's such a good observation. That's exactly right. In the daily videos on dangramza.com, moneyshow.com, is that's what right now those would be short these markets because the market's coming down. Do I believe in that? No, I don't actually. Personally, I'm looking for wheat to go up. I'm looking for corn to go back up. I don't think we have enough globally to meet demand, especially in those markets longer term. So I'm on the short side because that's what price is doing. Long term, I more lean to the wheat side long term up. But the issue for us is, as a trader, price determines what we do, not my belief. That puts money in my pocket and takes money out of my pocket. So that's why that's a lax dictator.
Dan, thanks for your time.
My pleasure.
You're watching the moneyshow.com video network.